Buying ads on Facebook is not like buying ads on TV. You don't just pay to buy commercial space. The Facebook ad system is built of what called an auction system. So in order to understand how Facebook charges for ads, it's important to understand how their auction system works first. The Facebook ad auction is how Facebook decide how much to charge for an ad. And the Facebook ad auction is designed to achieve two goals: creative values of advertiser by helping them reach and get results from people in their target audience, while also providing positive and relevant experience for people who use the Facebook products. And to achieve this balance, they hold an auction to match the right ad to the right person at the right time. So each time there is an opportunity to show an ad to someone, an auction takes place to determine which ad to show to that person. And billions of auctions take place every day across the Facebook family of apps. So who compete in these auctions? When an advertiser like you create an ad, you define your target audience on Facebook. But what happens when another advertiser wants to target the same audience as you? Well, then both you and the other advertiser compete in the auction to show that person the ad. For example, say one advertiser target all women who like flowers, and another advertiser targets all flower lovers who live in California. In that case, the same women in California who likes flowers could fall in both of those advertisers' audiences. And let's call this woman a dummy named Clara. So, how does Facebook decide whose ad Clara sees? Well, Facebook decides which ad Clara sees by running an equation that calculates a total value for each of these ads, which is effectively a commercial score. And the ad with the higher total value wins the auction and gets shown to Clara. So, what does this equation look like? An ad's total value is based on three things: the advertiser bid, the estimated auction rate, and the ad quality. And we will explain each of them briefly. The advertiser bid is how much an advertiser is willing to pay to achieve their desired outcome, like a website visit or a newsletter sign up. And you can manually set their bid, or you can let Facebook automatically determine what your bid should be. The more money you bid, the higher your advertiser bid will be. It's good to remember, though, that the winner of an auction is not simply the advertiser that pays the most. It's a combination of all the factors in the equation. And we will talk more about setting bids in another lesson. So, the next part of the total value equation is the estimated auction rate. The estimated auction rate measures the likelihood that a certain ad shown to a certain person will lead to a desired outcome. So it's basically an estimation of how likely the user is to fulfill your ad campaign objectives, whether that's pressing a shop now button or going to your website. The final part of the total value equation is ad quality. Ad quality is determined by many sources, including feedback from people that view or hide your ads, as well as finding a low quality attributes such as sensationalized language, engagement bait, and more. So the advertiser bid, the estimated auction rate, and the ad quality combined make up an ad total value. So what does this mean for Clara, who is being targeted by two flower companies? Well, let's assume both companies run an ad with the goal of getting people to purchase flower from their websites. They put the same advertiser bid, and Facebook determined Clara is equally likely to fulfill their desired goal. In other words, buy products from both of them. And means the estimated auction rate is the same for both ads too. Advertiser A, however, is sending people to a website that has a lot of ads on their homepage, as well as misleading information about flower pricing. And that's not a great user experience. So hypothetically, this could lower advertiser A ad quality score, driving their total value down. And this means advertiser B will have a higher total value score, leading to them winning the auction and Clara seeing their ad. So now that you understand the auction, how does that relate to how much you are charged for an ads? Billions of auctions take place every day across the Facebook family of apps, and often with far more than two companies. So every time you see an ad, it's the result of an auction. And Facebook only charges you for those ads when you win the auction. Facebook typically charges you by the number of times your ad is displayed to people, also known as an impression. And Facebook charges on a 1000 impression basis, also known as CPM or cost per thousand. CPM measures the total amount spent on an ad campaign divided by impression and multiplied by 1000. So an example is, if you spend $50 on your ad and got the 10,000 impression, your CPM will be $5. And you might be wondering why CPM is important. CPM is a common metric used by the online advertising industry to determine the cost effectiveness of an ad campaigns. And it's often used to compare performance among different ad publishers and campaigns. So when you get charged $50, you can calculate what you were charged for by the CPM price. And for some marketing goals, you can also choose to be charged per link click or per action. This means Facebook will only charge you if a customer clicks on your ad and take another specific action such as watching a video. And I'll show you later where you can make that choice to be charged per link click or action rather than impression. Now that you know how the auction works and how Facebook charges for ads, you are ready to set your budget in Ad Manager. And your Facebook ad budget is the total amount you want to spend daily or over the course of the campaign. Facebook will then try to spend your budget evenly throughout the time your ad is running, and you won't be charged more than the budget you set. So if you set a maximum budget of say $100 to run an ad over a month, but Facebook only spends $70 that month, based on the ad performance, your bill will be $70. Remember, when you are setting a budget for Facebook ads, it's the maximum amount you are willing to spend, not the actual amount spent. Finally, let's briefly cover how you will actually pay for your ads. In general, there are two ways you may be charged for ads. Many advertisers have what called automatic payments. With automatic payments, Facebook will automatically charge you whenever you spend a certain amount, which is known as a billing threshold. You will be charged each time you hit your billing threshold and again on your monthly bill date for any leftover charges. You can also pay via manual payments. With manual payments, you preload money to your account before your ads runs. After that, Facebook will typically deduct from that amount up to once a day as your ads run. For smaller amounts, Facebook may wait until the charges amount to a certain amount or until 7 days pass before they invoice your account. Alright, that's all for this lesson. See you in the next lesson.